Time to talk all things insurance now, and for that I'm joined by Gari Dombo, who's the MD of Alexander Forbes Insurance, for more on how the economic environment in South Africa actually impacts the insurance space. So good to have you as always, Gary.
Thank you, Gugu. Good evening.
Awesome. Let's talk about this almost depressing environment that we operate in on a day-to-day basis. We hear about the sluggish growth. We hear about consumers being under pressure. Does this often lead to individuals like myself cancelling their policies because you just can't afford it anymore?
Absolutely, and unfortunately the impact is more extended than actually just individuals. It also does extend to businesses. Insurance by its nature is really a risk transfer mechanism. So essentially you've got individuals and or businesses transferring their risks to an insurance entity who then insures those exposures, so that in the event of a claim they're able to get some recourse, and that recourse essentially is getting back to the same position they were in prior to the loss. So certainly where the clients are impacted, whether business or individuals, where they are impacted by the economic challenges, then certainly there is a huge impact in as far as ensuring that they maintain their premiums and maintain the cover in place. And certainly it's a huge challenge.
Where do you see more of a shortfall, individuals or businesses?
I think we see it across. We really see it across. It extends to a number of areas. One of the areas, for example, is we've seen on our portfolio that clients would normally replace their vehicles every 4 years in a kind of normal environment. We've now seen clients extending that period 5-6 years to actually replace a vehicle. Organic growth itself is impacted, and this is where clients are actually acquiring more assets and increasing the value of their sums insured, which obviously has a positive impact on premiums. That has had obviously an impact on insurance premiums generally. So we see that huge impact, and certainly insurance is a cornerstone to the growth of any economy. And it's critical then to ensure that we find a way of balancing, particularly in this tough economic environment, both in terms of business insurances as well as individual insurances.
Let's touch on it from both aspects, from the insurer's point of view, because clearly yourself and your team need to come up with the innovative ways of ensuring that consumers get the cover that they desire, but also making it efficient on their pockets, and also on the consumer's view or the business's view, the insured rather, let me refer to them as that, sure. How they can make financially savvy choices when it comes to choosing the right insurance.
Absolutely. The challenge mainly is clients then tend to just look for the cheapest cover. And our advice is always not all insurance policies are the same. There are products out there on the market, Google, unfortunately, that are quite misleading. And we always advise clients to consult their consultants, their insurance consultants, and understand the detail. The devil is always in that detail. So for us, the key issue is really to say, sit with your consultant, go through the details of your cover. What is the excess that you currently carry, and can you afford that excess cover? Can you actually increase the excess so that you reduce your premium? More importantly as well is turn around and say, how can you participate in the risk? In other words, what is your risk management participating level? For us, it's important because it assists in insurers actually reducing your premium. That for us is important, because it's always critical that clients turn around and actually say, I can carry part of the risk myself. And if I carry part of the risk, what is the saving that I can actually enjoy on my current offering?
Would this also be an opportune time where your no-claim bonuses are also paid out, and maybe consumers can get some kind of relief there?
Absolutely. The less you claim, the better insurers would normally look at you more favorably in terms of the rates. But also, as you improve your own risk, it also assists you in terms of basically the premiums that you eventually pay. The wording itself can be restricted. You can look for restrictive cover. And restricted cover can come in many forms and shapes. One could be you put in a named driver on your policy. Instead of having an open driver policy, you actually reduce it to a named driver policy. You could enhance the security on your own risk, on your own property. That, as part of your risk management intervention, should ultimately result in reduced premiums. So there are a number of areas that we encourage our clients to look at, but consult with your insurer, because you need to understand exactly why you're going into what you're going into, and that's important. I think as insurers, Google, we also challenged to actually say, can we come up with more innovative products that actually ensure that we take more into the pool? Because currently only about 40% of clients out there actually insured. Particularly when you look at the motor risks, you find that of the 12 million or so vehicles on SA roads, only about 4 million are covered. So we need to say, how do we extend that pool and increase the pool from the current 4 million to a bigger number, because ultimately that will result in reductions in premiums.
And it's a tough mix, I take it. Quality cover,
Absolutely.
but making it affordable,
Absolutely.
And vice versa.
It is.
What about fraudulent activity? Google might be experiencing tough times, decide to burn down my business. Does that happen often?
It does. Unfortunately, it is a criminal offense. But yes, there are areas where you find that clients do commit fraud. And fraud comes in also in many shapes and sizes. Part of it could be you just increase your amount of claim. So you've genuinely suffered a loss, but you increase the quantum. And sometimes clients actually think if they increase the quantum, insurers will bargain with them and reduce it probably to the level at which they actually lost their assets. But it's important to be honest, because the transaction that we enter into with clients is based on the bona fides of both parties. So it's important that insurers also meet their part of the bargain, which is basically placing the client in exactly the same situation as they were prior to the loss, which is what we call indemnity, and that's important. But if clients exaggerate their claims, it becomes a criminal offense. But yes, it goes beyond that. You find in certain instances, yes, there are isolated cases where clients do take extreme measures because of financial difficulties.
Sure. Let's certainly hope we won't see too much of that. But Gary, thank you so much for your time today. Always a pleasure speaking to you.
Thank you, Gugu.
That was Gari Dombo, who's the MD of Alexander Forbes Insurance.